as I see it. But there's been a sharp pet coke as well as coal prices also, which has clearly impacted your margins. I wanted to understand what really is the strategy. How is it that you're going to deal with these kind of RMC pressures going forward?
So this is of course a major concern for the entire cement industry. However, we have long-term FSA contracts in place. We have substituted a portion of our power requirement to biomass, and we have constantly worked on cutting our costs. Also, the price increase has supported the margins. So, I do not think there will be a further dip in the margins going ahead. And the target that we expect is about 1,300 tons per ton for Star Cement.
Sure. And what about the dynamics of the new plant in Siliguri? How are they shaping up, as well as the new clinker capacity that you set up in Meghalaya?
Yes, so we have commissioned the Siliguri plant last year, and the utilization of the plant in that year was about 42%. This poor utilization is due to the sluggish demand that we had for the first 3 quarters of last year. However, we have now started to utilize the plant at about 70% capacity and expect the margins to improve significantly. As for the 3 million ton clinker expansion, we have ordered most of the major machineries for this expansion, and this should be up and running by end of next calendar year. And for the WHRS project, this project will be commissioned in October this year.
Tushar, hi, morning. Now, CapEx is higher, close to 850 crores slated for expansion. Is this completely internal accruals? And what is the outlook in terms of utilization? And do you think that the company can maintain its debt-free status going forward?
So there are basically 3 projects which are going on at the moment. We of course have the 3 million ton clinker plant coming in Meghalaya, and then we have 2 grinding units of 2 million tons each in Assam. So the total capex outlay would be of about 2,000 crores. For this, we have about 750 crores as cash reserve in the company. And with the cash inflows expected in the next 2 years, we may require short-term debt, but it will not lead to any long-term borrowing.
You've also got a very strong presence in Eastern India, and the Eastern region as well has seen quite a strong growth in the quarter gone by. So what has the demand scenario been like for you, and how do you see it panning out going forward?
So, the demand scenario in terms of volume, we have increased, in terms of volumes, we have increased 28%. So the demand scenario going ahead seems good, mainly because of the, investment by the center in Eastern region, especially Northeast. So we do expect, the aggregate demand to be driven by the government expenditure and, a lot of investment in infrastructure.
Right. So over the past year, rising fuel costs have clearly remained a very big headwind for the sector. Wanted to understand what really is your pricing strategy, and are you planning any further price hikes going forward?
So yes, I mean, since December, there has been an increase of about 60 to 70 rupees per bag price increase in West Bengal and Bihar. And even in Northeast, there was an increase of about 20 to 25 rupees per bag. And, you see the similar trend in May as well. So I do expect, the prices to remain high. And even in off season, I do not think that the prices will fall as much as it did in the last years.
So do you think demand can assist the increasing competition which you're seeing in the sector with bigger players now entering the space?
Yes, of course. So, I mean, we primarily operate in some parts of East and Northeast. So here the demand situation looks healthy, like I said, because of the government expenditure, which is booming in this part of the country. And I do think that this will create enough demand for better utilization of large and small players both.
All right. Thank you so much for joining in. We'll let you go on that note. Let's get a move on then and take stock of what's happening within the gaming and casino space, because we understand